26th, 2024. It's Don Kaufman here. You've got just about 3 minutes to go to the cash open here. Again, on this Monday morning, SPOOs are massively unchanged on absolutely no volume. Of course, the only stock moving in the entire, fleet, if you will, is Nvidia. Nvidia's got some movement in pre-market. Nothing too crazy. Let's not get crazy about this. Tesla's had a bid in the overnight session, kind of faded a little bit. It's interesting because Tesla was actually down, it rallied back up a little bit. But all I'm showing you right now is stuff that is moving in the pre-market, and of absolutely no surprise, it was it's all the Magnificent Seven. So taking a look also at the financials are massively unchanged. This is important. The XLF this morning. Um, yeah, by the way, somebody's saying no volume. What do you, there's no volume? There's volume, man. There is volume. You do hear me all right? Yes. I'm gonna make sure. Yeah, okay, there we go. Just having a problem with my sound card this morning. My speakers won't work, but I can hear it in my earpiece. Anyway, 2 minutes to go to the open. The reason that the financials are so important is that Berkshire Hathaway is the leading constituent of the XLF. It had earnings, of course, on a Saturday afternoon. Who would have thought? Anyway, some of the other financials though are down slightly. Anyway, with that last major sector to look at, of course, is the XLE. It's unchanged. And by the way, volume this morning, volume this morning is crap. 146,000 contracts. What does that equal? Equals crap. It's crap, I tell you. There's absolutely no volume here whatsoever. Speaking of volume, it's also important to denote you really cannot read into the volume in the bond market right now. There's a major roll going on. So roll them if you got them. And I ain't got any, so I'm not going to roll anything. So we're going to come into a cash open. There are no drivers this morning. The only thing that is going to be important is, exactly what I talked about in the weekend update, and that happens to be Nvidia. Nvidia is, it's the one stock market, and it's kind of unfortunate. Obviously, there's some other stocks that matter to some degree, but see, it's kind of unfortunate because you're looking at what is going to be a eventually a rather ugly situation, especially when we concentrate all of our firepower into it. So as we come into this cash open, it's also I think of critical importance to kind of mention there's some big data that'll be out. That's timing is all off. There's some big data that'll be out, but that big data is not going to be out until later this week. Let's come to the cash open. So at the bell, the advanced decline line is prognosis negative. So AD line is mildly off. I don't think there's a great read on that. Kind of the irony is throughout the latter portion of last week, and again, just sit here, just let it happen. Look at this, the ticks negative. You knew that, right? Throughout the latter portion of last week, there were a lot of negative advanced decline lines, and negative ticks in a marketplace that was rallying. I think some people caught it, not everybody caught it. I know Corey was actually mentioning it quite a bit. Again, it's crazy. I like what somebody Kirill just said is Nvidia is now the 12th, in the world economy right now in front of GDP of Russia. I mean, that's I've been making the point for a long time. I like that. I've been making the point for a long time. You can't look at tech companies the way that you used to, or you can't think about them, at least in my opinion, as companies. They're their own sovereignties. My favorite was somebody named this the People's Republic of Google. uh, okay. Meta. What the hell would Meta be? I don't even know what to call that. Hmm. Um, anyway, uh, with that being said, let's let's get off and rolling in here. I want to make sure that everyone has the SPX expected move. I can post that again momentarily. For those of you that do not have it, okay, the United States of NVIDIA. There's the SPX expected move. I just posted that in there again. And again, I'll share the schedule for today. Make sure everybody's got that as well. So we have, again, all back on schedule. I had no intention of being out all of last week. Just didn't know if my internet connection was going to be good. So take a look at this. So big divergence in early trade. The S&Ps are up, and they were literally unchanged at the bell. But the S&Ps are up some 5 handles on pure unadulterated negative ticks. And the ticks are not exactly horrific here. But again, there's quite the little divergence in the force, and the advanced decline line has dropped a little bit. I am showing you Google in here, which is taking a bit of a hit. So Google is notable in this, and it's notable in this simply because it's enough to counter some of the move, not all of the move, but some of the move of Nvidia. Speaking of Nvidia, let's just cut to the chase. Let's get right to it. What does order flow look like this morning? It's total slop fest in here, and it's actually light. So light order flow in Nvidia in early trade. Robin, listen, I was looking for something who was meta aliens. I was looking for something far more derogatory, but that'll work for now. Just, I'm sorry, but if you look at Zuckerberg and think of like, an alien, that works for me. It seriously, it does work for me. So yeah, good stuff. I was I was like, nope, that's too derogatory. I was going a different direction, but sure, what the hell? Let's uh let's zero in again. What I look for in this order flow, okay, for those of you that are a little bit newer. By the way, Eric, we'll talk about ES and MES hedges, whether I'm going to roll them, whether I'm actually going to let them sit. I have to think about that one. And Eric, you'll see why here in a minute. But what I am looking at here, and again, we're going to kind of let the market settle in a little bit, this order flow, okay? And I've mentioned this about 1,000 times, but obviously in every market, there's a bid, okay? And there's an ask. And what you have here is traded at the bid or below, traded at the ask or above. If you're trading at the ask, I mean, this market in here could be like $10, at like 1070, that'd be a reasonable market. And when you see traded at the ask and that number gets big, okay, it's indicative of somebody just coming in and going buy. They're just buying at the ask. And it is, very easy then at that point to say to yourself, like, here's a market very close to what I was just mentioning. But it's very easy at that point to say to yourself, like, okay, that's going to drive the market a little bit higher. What is so insane about this market, and it is complete pandemonium in there, like make no two ways about it. What's so insane about this market is how heavy the inverted skew has actually become. The other thing that's insane is look at the what I term firepower. Okay, I term firepower. Volume is easily discerned to say, oh, look at the volume in here. Okay, volume is just not the right term. Okay. The terminology here is, okay, the machines, as Jeff Bierman would start screaming about algorithms, but these machines, not only are they turned on, but they're turning everything towards, a handful of products. Okay. And I'm just pointing out, which is extraordinary volume, okay, on a handful of products. And the reason I like to point this out is I just cannot stress enough to people that, I'm so sick of people. The market's broken, the market's this. Look, okay, markets have always done crap like this, always, right? It's the only thing that's different is when you look at like 98, 99, and 2000, again, that was a broad base, rally with a lot of different products. Well, this time you just have a handful of products and they're concentrating firepower into those handful of products to drive, okay, stock movement. And you really you look at this and you're like, well, who the hell would ever want to buy at $800? Like, look, who wants to buy in the midst of this rally? And I'm just going to be very forthright in saying, like, yo, who wants to buy? It's not about buying, it's about hedging. And it's so often missed. Okay. And you have to almost remove yourself from what you know about markets. What do you know about markets? When you buy something, it goes up. Okay. But what if there were a scenario where, okay, you could buy something, it goes up, but they're not buying it because they think it's going to go up. They're buying the stock because they're hedging off uh, an alternative position. And it blows people's minds when you start saying things like that. Okay. They're not buying the stock because they think it's going up. On the contrary, they're buying the stock because it's a hedge for a position. There's a lot of ways in this business, okay, to make money without necessarily taking on directional bias, dispersion tactics, and delta neutral trading and market neutral trading and premium selling, and just to name a few. But dispersion is what's going on in this product. In any regard, the thing that you have to realize specifically about, let's not even talk about the idea of a gamma squeeze or anything like that, but dispersion, okay, it has to do with like selling premium in like SPX and buying premium in something like Nvidia. It works both ways. Okay. There can be only one. No, it works both ways. Dispersion tactics can actually work to the upside, which in light of what you might think, there is one solid reason, okay, that it works better to the upside. And it works better to the upside because people get caught in short squeezes, okay, and have to turn around and buy, which actually perpetuates even more buy side. It actually helps the tactic. Where a sell side is a little bit more volatile. By the way, they'll believe me when I say this, those trading firms will take the downside too. Nevertheless, okay, you're seeing a very one-way marketplace right now. And I said this in the last couple of weekends, you're on what I would term Nvidia watch at this point. Okay. It's gone clearly too far. And by the way, when I say too far, I do not give two craps about, what you think about an RSI or a MACD at this point. Okay. Because we're hitting record levels, regardless of what, again, you can look at the RSI till you're pretty much blue in the face. Sorry about that. I'm bringing up the actual code in here. Um, anyway, you can look at this till you're blue in the face, and it was, in the 90, almost 90 handle. Okay. We sold off for 3 days, took it back down. But was it SMCI hit the highest RSI on record? Okay. All it did is stalled out and continue higher. The point that I'm trying to make with that, okay, neither here nor there. What you have to start to think about is, okay, there's going to be more psychology playing into this than anything. And there's a lot of trading firms, okay, unquestionably, that are looking at this and saying, yeah, too concentrated at this point. Even the dispersion firms are actually saying right now it's too concentrated. This is getting stupid. When you have trading firms that are not trading based on directional bias, okay, saying that this is getting stupid, you need to start to pay attention. And that's why I say it's Nvidia watch to the end of February. That's it. Right. This stock is going to get absolutely annihilated. And that doesn't mean that it's not going to rally back up, because it got annihilated, right, at a point last week, right before its earnings, and then bounced. Okay. It's going to get annihilated. And it's going to be unfortunate if you get caught in that crossfire. There's no problem in trading NVIDIA. Okay. But your trades must be defined risk at this point. Look, I have no problem in selling naked premium, okay, especially in an inverted implied volatility skew. But this is not the time nor place. The problem that you have, though, in NVIDIA is that the volatility is so heated even after earnings. The volatility in here is still, the IV rank is the 44th percentile, which is crazy after earnings. I mean, it really is. And then the historical volatility, which is the annual standard deviation of past stock price movement, is at 64%. These are really heavy, heavy numbers for a marketplace, okay, that just, rallied from, well, roughly speaking, the beginning of the year, let's call it 500 to 800, right? So it's added quite a bit of market cap, but the danger obviously lurks in this last move to the upside. Okay. Now we've all seen crazy like this. And for those of you that will recall, right, we've talked about the exact same crap inside of Tesla. Okay. Right back here, right when it broke down. And as I said to you, okay, it'll have some wild down days. There it was. And then it rallied back up and then it fell. Okay. Once it has that wild down day, which in my opinion has already transpired in NVIDIA. Okay. I think NVIDIA at this point, it already had what were two really hostile back to back days. I think the earnings actually saved it. Okay. But I think there's already chum in the water at this point. So the question, of course, is everybody's going to ask now is how do I trade it to the downside? Okay. It's a pain in the ass to trade this thing to the downside. So let me just state that again. Pain in the beep. And another thing, beep, beep, beep. It sucks to trade it to the downside. Why? Because, and some people just don't like to hear, like, oh, it's a pain to trade to the downside. I'm not saying you can't do it. Okay. I am saying, though, that you're going to get some really crappy pricing. Because even if you went 81 days out, 81 days, let's not try to time it. We come out here and you try to buy a put spread. The problem with the put spreads, they're not trading favorable because the implied volatility skew, okay, sucks in here. There's no skew helping you in buying the put spread. So how do you trade it? From my point of view, okay, you trade it in the Qs because the Qs are actually going to have that skew, right? So if you looked at a strategy in the Qs right around like, that 30 some odd delta, okay, if you looked at something in the Qs, you're going to be much better off in the Qs because here's a $10 wide spread in the Qs. The thing is, people, they just don't think past symbols. Why do you give two craps whether you're trading NVIDIA or the Qs? Well, you're going to tell me a QQQ $10 wide spread is not going to pay off if NVIDIA tanks. Okay. Sheer stupidity on a lot of people's part. And I don't mean to be so hostile, but it's double the price. Okay. To basically play around in NVIDIA for something that you could do inside of the Qs. Right. It's just, you got to get off that. Oh, it's a one symbol world. It's not. If NVIDIA tanks, Qs are going with it. Right. Okay. And you could, so Andy was mentioning like AMD. Okay. Yeah, you could look around. You could look around. Let me, honestly, man, I haven't looked a lot at AMD. Okay. I had such a bad internet connection last week that I was looking at like some of the primary products. The skew in here is not bad. Okay. So, and again, I am intentionally going 81 days out. It's still not great. Like $3.50 seems expensive. Okay. For that. It just does. It seems expensive. So if you're looking at something like a catapult, right? And you're going to build a catapult right now, you sell S&P options and futures and then purchase QQQ put spreads. Okay. And it's not about being bearish in the whole market. It's about being bearish in Nvidia. If that's, what you want to trade. So the question is though, if Nvidia starts to tank, which it's coming off here a little bit right now, but if Nvidia starts to tank, speaking of Nvidia starting to tank, look at what's going on right here. Okay. So calls are definitely being sold and they're definitely being sold in heavy amounts. Yeah. But no one's actually reaching to buy puts. Okay. So if this is going to get crazy, then it's, you would see a lot of put buying in here. Yeah. So Vin was saying Wi-Fi on cruise ships is not good. So, I paid a lot of money for an internet connection and I was getting three down and like one up, like literally like, three, not 300, not 30, three down, like one up. And they're actually using what is Starlink, which is SpaceX. Okay. So I tracked down while I was on the cruise. That's causing problems. First of all, I tracked down like an officer because I wanted to go see the engine room. So stupid. You have to pay 250 bucks per person to go view the engine room. Okay. Like really? Okay. That's not the way it's supposed to work. Right. You're supposed to take my children down there and go like look at the giant engine room. Anyway, so I was talking to an officer though. He's like, "Oh, are you kidding?" He's like, "That SpaceX thing is friggin' awesome." He goes, all of the officers on there have like 150 to 200 down. He's like, "But you know, 7,000 people on the ship." He's like, "We just limit to you guys to three, so you don't screw up our bandwidth." I appreciated, I appreciated that. Um, but there was never a point where I didn't have an internet connection. Although I got off the ship in a couple of different places just for a few minutes. Okay, getting off like one of those cruise ships, it's brutal. You get off on like some island in the Caribbean, and I'm like, this is not what this island is really like. We'll talk about that along the way. Okay. If you ever get off a cruise ship and you go to some island, okay, and they're like, hey, look around over here. That is not the island. I got off in Jamaica. I was like laughing. Okay. I was laughing because like, wasn't having to be scared. You're in like a secured area. Everything's, 300% marked up. Okay. You got to go to the scary places. Anyway, the S&P start to come off here. Nvidia just went negative on the day. Let it happen, people. Let it happen. And again, what you want to see in NVIDIA though is, and I'll be crystal freaking clear with this. Okay, forget about calls being sold. You want puts to be bought. If you think NVIDIA is going to go down, they're going to be buying puts. Okay, and that what'll happen is the same tactic that actually drove us higher will drive us lower. How long, how far? Okay, look, this is not going to be nice. It's not going to be pretty. Okay. It's not going to be a lovely move to the downside. It will probably be, okay, every man, woman, and child for themselves, though, at some point in here. Okay. After people kind of recognize, like, it'll get smacked. I was saying, oh, you need only look at the expected move, but that'll get smacked probably double the expected move, could be like an $80 move in a day. And then everybody starts to flee after that. Okay. And that drives this squeeze to the downside. And you don't think of like it's not a short squeeze, it's more of a gamma squeeze. And that can get wild. You're going to have days though where, test us a little bit before that happens. But there's just no question right now that you should be on what I would term NVIDIA watch, which is, day this week where it has some phenomenal move that starts to actually spark, okay, big issues for, well, big tech. Speaking of big tech, it was also very notable. I want to come in here for just a moment, and then we'll move on past big tech. I promise. Okay. Um, if you take a quick glance, auto expected moves. Okay. So here we actually had Microsoft. Microsoft actually did hit the upper edge of the expected move, reverted back a little bit inside of it last week. So no question that Microsoft had a bid under it. Why I'm mentioning this is, okay, what you saw out of Nvidia and its earnings, which it did exceed its expected move. Not too wild though. Nothing crazy. Okay, but it did exceed the expected move. Which you saw, okay, was also obviously felt to some degree, to a much lesser degree inside of Microsoft. Taking a look at Apple. And the reason I'm bringing this up, Apple last week, and I didn't have time to do this in the weekend update, but Apple last week was actually completely unchanged. So here's a $3 trillion market cap, and you have to pay attention to this stuff because it is struggling, right? So it does not have a bid under the marketplace. The reason I'm going through the expected moves from last week is to paint, okay, a very, I'll say it, fluid situation. I don't want to paint, okay, a bear on the wall over here. That's not my intention, okay? But it's going to be a very, very fluid situation right now with what you have in terms of support to this marketplace, okay? There's nothing. Take a look at Amazon now. Amazon, all right, big move to the upside. Look, Amazon added to the Dow, had a big move. So what do we have so far? Microsoft, upper edge of the expected move. Amazon, upper edge of the expected move. Apple, unchanged. Okay. Google last week, all right, hits the upper edge of the expected move. This week is already outside the lower edge of its expected move. Okay. This fairly critical in today's trade. That is going to be a big drag into NASDAQ overall. It's tough for the NASDAQ to rally. That's a big move. It's almost 3%. Okay. Meta, Meta hitting the upper edge of its expected move. Again, one of the reasons I'm going into this in such detail this morning. Okay. That thing is just, all of them are basically spot on. So when you sit back and you start to scream about how wild and woolly the market was last week, Okay. Well, honest truth is you basically hit expected moves in most of your products. Okay. Tesla's had the living crap beat out of it recently. Okay. Had a down week last week, has a good bid under it. Obviously, Nvidia, which we've already gone over, hitting outside. Okay. Hitting outside the upper edge of its expected move, but nothing too drastic. Okay. So the moves last week, again, most of your tech stocks had some influence. Apple did not. Sector wise, energy. What did energy do last week? Absolutely nothing. And then, of course, financials. Okay. Now, financials, to me, this is one of the bigger surprise. It actually did have a bid under it last week. Probably a lot to do with a bid before, Berkshire Hathaway's earnings. So again, I wanted to give you a little perspective on that one because it feels in just the last maybe two trading sessions, we look to be edgy on tech, okay, and starting to throw a little bit more capital towards financials. So there is some type of rotation going on, especially in today's trade. Okay. Again, I think it makes it a pretty fluid situation, though, where Nvidia is barely holding it together today. There's just nothing going on inside of big tech, okay, other than Tesla, which this is just going to have a minimal impact now. It's crazy to say this, but take a look at Tesla. It's a $600 billion company, okay? The only reason it's worth mentioning Tesla is because it has almost a 50 vol, right? I mean, but it pales in comparison now to almost everything else. Okay. And then there were six. Uh, Really important though to get that feel of what's going on because each one of these stocks now is no longer a stock. Now they're basically their own index products. That's of the significance, if you will, okay, of an Nvidia, of a Meta. Okay, they're their own index products. They're more important. One stock like Microsoft is more important than an entire sector. People look at all these sector ETFs. Okay, why waste your time? You look at the financials, you look at some of the Magnificent Seven, you look at energy, you're done. Nothing else can move markets. I mean, you can get a huge bid, under every drug and healthcare stock out there. No one gives a damn. Okay. It's not going to move markets. There's not enough market capitalization in here. And yes, I am looking at the healthcare, just to make a quick point, the healthcare ETF. There's no option volume whatsoever in the healthcare ETF. None. Okay. Non-existent. There's been a bid under this thing. Okay. For the last few months, it's up almost 6.5%. I'm showing you, one of the most pivotal, of these ETFs. And yet, okay, just taking a look, making sure that's coming up. Just taking a quick look at the market cap of United Healthcare, right? It's a $500 billion company, which, again, that everything else is pretty minute in comparison to the size of that, but there's not enough to make this market move. Speaking of which, United Healthcare is actually down percent and a half. Interesting stuff. Yes, it is. Anyway, with that, back to the S&Ps just briefly here, and then we're going to get very specific. So ticks have actually turned positive, all right? The advanced decline line has actually picked up a little bit, but I'll make a very brief argument as the ticks have gotten positive, okay? And the advanced decline line has actually picked up, okay? My caution to you is that tech, okay, there's just not a lot of green to show for it. So at this point in time, if a rotation is underway, you could be buying, watch, you could be buying financials, you could be buying energy, but as long as you're selling tech, these S&Ps, they can't go up, right? And that's why I'm saying it's its own animal out there. It's its own animal. All right, let's cruise around, start talking a little bit about positions in here, answer a few questions about those as well. Oh, back to good coffee. Crappy coffee on that boat. Okay. There's other people on the boat too. That's just not good. Not good. Yeah, I had never been on a cruise before because the thought of like 7,000 people, whatever the hell it was, on one ship, did not do it for me. But I found my stride. I found places where people don't go. I cannot tell you. Okay, I cannot reveal my secrets of where people don't go. Actually, people go onto islands, and I was staying on the ship. I'm like, I'm not getting off this thing. There's nobody here today. There's still some call selling going on inside of Nvidia. There is no put buying though in there. Okay. Stop saying germs, Terry. Stop saying germs. Okay. It's a very dirty world. It's a very dirty world. Uh, Everybody was sending me like articles of like a norovirus breaking out on some ships. I've had that before. That sucks. Okay. Uh, 6 years in the Navy. I would be fine in a boat. Just, everybody else has to get off. It's okay. Okay. But at the same time, like I do not ever want to own a boat. I grew up, okay, in and around boats. I grew up on the North Shore in Long Island and we had boats and yeah, I'm never gonna own a boat. That is a fact. I will never own a boat because that thing, that's worse than a house. It's, worried about a house flooding. Get a boat. Anyway, S&P is just backing off here a tiny bit. It's been a bit of a slop fest this morning in terms of positions. Let's get right to it. Okay, so one of the positions I want to talk about, because of course I'm going to get 500 emails about this. Okay, is right here. People are like, close it. You need to close it. Well, it's up 51%. However, I have a hedge that's going to expire in 4 days. Okay. So I have a hedge that's going to expire in 4 days. I think I might just leave it alone and let it burn for another 4 days. Okay. And then rehedge, maybe sell another put another week. So I might just close this position later in the week and let it burn for another 4 days because there's no risk to me. Like if the market, I mean, could the market crash to 4,400 in the next 4 days? No, but if it got down to 4,600, I'd probably be really happy because the hedge would actually pick up. But we're at 5,100 people. It's not likely, not gonna happen over here. But I'm gonna burn a little bit more out of this 4,400 put, okay, which is nothing more than a gesture to cover some more of the cost of this hedge. Ideally, I wanted to sell multiple puts throughout the course of this expiration. Okay. And I didn't get a chance to. Why did I not get a chance to? Because the market went like this. Okay. The market, when I say went like this, there's not been too many great opportunities, okay, to sell any puts. Does that mean we shouldn't sell puts? No, but I've been playing this like onesie twosie crap and I need a good opportunity to sell some puts. And I just, look, patience is going to be a little bit necessary in this. In other discussion on here, so I'm going to let this little monkey burn at least a few more days. I mean, basically, I'm hedged until Friday, right? So I could literally burn it to Friday, close it Friday, and then I'll reassess with no hedge. I'll reassess what I'm gonna do on the following like Monday. And it's a smart move because what am I going to do right now? Buy this back and roll it into something else and force another hedge right now? Okay. It doesn't seem like a great idea to force to put on another hedge right now. This one I got to let it expire and I'll close this 4,400, which is up 52%. But let's say even if the market sells off this 4,400, okay, could be worth a little bit more. I'm just not taking any real risk in holding it past the 50%. And normally I am just adamant, take them off 50%. We don't have two or three of them on. We have one. We have one against one hedge. The hedge has 4 days left. Okay, there's no risk in trying to burn it to a 60+% gain, and it'll do just that. right? So it's up some, $600 in here. It'd be nice if it actually covered another $100 worth of that hedge. We'll see. We'll see how it actually plays. But I want you to relax a little bit about the 4,400. Okay, the 50/50 calls. Okay, obviously I still have them on. What am I doing with them? I'm sitting tight. I had to close a big loser. Okay, but in here, it's not pretty. Okay, it's got 81 days left to it. What am I gonna do? All right, let's first, okay, let's get eyes on it. And as I said, it is not pretty, but even a roll may not be pretty at this point. So we're going to open up, okay, some strikes. Let me knock down the number of strikes that you see in here. Let's just knock that down to like, 40-ish. So we're just going to knock down the number of strikes we see. So if we were to buy it back right now, great. That's absolutely brutal. If I rolled it out in time, even like let's get crazy. Let's just go to the 143-day, 123-day expiration. Okay. What could I roll it to for credit? It's the 5150s, right? The 5150s. And in doing so, okay, I can't stand this freaking platform anymore. In doing so, I could actually do that for a very mild credit. Okay. That's actually not a bad idea. I'd like to be maybe a little bit of sell side activity, just the slightest bit. But yes, okay, unequivocally, that roll is on the table right now. Okay, I've burned enough time out of this little monkey. And if I do roll it, okay, it then puts me at like basically just a near money position. It actually pushes my delta off a little bit. Okay, I think that would be a great roll. And I am, again, I'm just trying to burn a little bit more time. Of course, somebody's going to ask me why not go out to 144 days. Okay, I could, but it doesn't help me a whole lot to do so. If I go out that far, yeah, I'd be rolling the same 5150s and doing it for a big time credit. Okay, that's a little bit on the edge. Okay, that's a little bit far out. And it would be a very similar trade right here in the Theo Theta Small. Now, Theo Theta Small, I'm in the 4950s. So that's not pretty. Okay. In those 4950s, right? If I bought those back and then rolled them out, okay, I'm limited in what I can do in the small portfolio, which is exactly my hesitation in rolling so early. In the small portfolio, it's like, well, crap, man, I almost have to go 144 days out. And that's why I've kind of hesitated. But look, I can do something different in the big from the small. Anyway, in here, okay, this roll, I could roll to the 50/50s. It'd be done for like a $6 credit. And after it's all said and done, and we start trading it, it'll be more like a $4 credit. Okay. I am going to wait. It's not helping us a huge amount to get that roll off right now. Okay. It would help us again. This is not just about sit and wait, it's about burn time, but ideally and literally, okay, one of two things has to happen. We either flatten out, okay, or we come down. If markets flatten out, we can roll our way out of this position. It'll just take time. It's not a good position, but this one lot in here, I have no desire to close it. Okay, why? Because I think we're actually in decent shape with it. We're in decent shape with it, a lot better shape than we were a few weeks ago. Markets have definitely continued to kind of spurt on that Nvidia earnings, but again, we burned more time, and every one of those is there was actually a roll that I did recently here, okay, for a big time credit. And I think it was actually in a small portfolio. It's like a $20 credit in here. So bear with me, but last 120 days, let's just filter to MES. Okay. If you take a look at some of the rolls in here, look, the one of the last rolls I did is like a $20 credit. Okay. So I'm trying to chip away at some of the premium. Okay. And when I say roll my way out of it, you just can't have the market continue to progress to the upside. Everybody's, well, what if it does continue to progress to the upside? Okay. Kind of roll with the punches. That is what's so important over here. Okay. Is that we started with a net neutral position and the markets made us directional. Okay. right? How many deltas am I actually taking though? Well, with all due respect, my delta in the Theo Theta large portfolio is only negative 300 SPY deltas. That's not going to sugarcoat anything. That's still costing me a couple of bucks, obviously. If we continue to spurt up like 100 points in a day, that's a $3,000 hit with 100. That's a very linear way of thinking of it, but it's basically this $3,000 hit that you could take with a 100-point move up in the S&Ps. What has been, okay, so incredibly important about this is that you got to be mindful. We took a little bit of a hit, right? Okay, we knocked one of the positions off. Got to be mindful. Markets don't just rally forever. Okay, and that's something that's hard for people to actually fathom right now. So somebody was saying, Ernie was saying, should I sell like 35 delta? Okay, and revenge trade? Oh no, you're done if you do that. You sell 35 delta, it won't decay. So in Ultima, 35 delta doesn't decay. At that point, you're just taking a directional bias and getting pissed off at it, and that's just not going to work for you, right? Um, you got to go out there, and I got to tell you, the way to recover, from a hit, you got to sell calls and puts, and we have to have a little bit of a two-sided marketplace. But if you sell 35 delta at that point, okay, it's just not, those options don't decay like a 8 or 10 delta. Okay, you just have to get out there and get some size on the put side of things, which is hard to do when markets don't sell off at all. Speaking of markets not selling off, okay, Nvidia still holding it together. Right, things got sketchy, things got crazy, and we're still holding it together. There's just no question that in this product though today, there's a lot of calls being sold. Okay. There's actually some buyers coming back in though right now. Volume is definitely picking up inside of NVIDIA. But as I was really detailing, there's no put buying going on. There's no, nothing ferocious going on in that marketplace other than some back and forth. I would say that Google and now Meta are well worth keeping an eye on. There's definitely some sell side going on. Again, Google. So we could talk all day about some of the news out there, but Google in most respects, okay, it's starting to receive some real competition, and there's concern. That's all I'll really mention on that particular front. Let's actually look around, talk about a few other stocks before we get into any further positions. So one of the first things that I wanted to mention here is on the week. Let's go to the SPX. Okay, expected moves. So what are we anticipating? Okay, one of the things that I was surprised by it. Okay, if you take a look at, we're just going to cruise over to a scratch pad here. So hang with me for a second. Go take a quick look at the scratch pad here. This is just the, by the way, this is the my bullets from the weekend update. The in the scratch pad here, you can see the 4-day expected move. That's this 4-day expected move right here. Okay, was roughly speaking, and I'm just going to label it because I think it's incredibly important. This one was about 67 bucks, plus or minus 67 bucks. This week, okay, let's just call it 64. Okay. Crazy thing is, that was a 4-day week. It's a 5-day week. What did the marketplace see last week that it doesn't see this week? Okay. The only thing you really have an answer for is probably Nvidia's earnings. Okay. But this week on Thursday, which is right about here, we do have PCE coming out. That is absolutely gonna matter. So that PCE data coming out, which is now why I'm going to cruise over to the calendar. There are a few things that you want to be aware of, okay, this week. What's weird is this is the first Friday of the month, okay? The unemployment, the official unemployment numbers, though, the first Friday actually falls, okay? The unemployment numbers, okay, I believe are being pushed out. Yeah, the employment situation is being pushed out to March 8th. Apparently, the feds that be can't get their crap in order by that first Friday of the month. Nevertheless, that's the employment situation. The big number this week that is being highly, highly anticipated, okay, is right in the neighborhood here of Thursday. Okay, Thursday is PCE data. The reason I'm making mention of it, there's PCE data, the Chicago PMI. I mean, this is a crap fest of data coming out on Thursday morning. Okay, the SPX, and the reason I was, talking about the SPX, not a huge amount being priced in, okay, till obviously right there. And you can see it's a standout. It's a standout, people, in the SPX. The highest volatility that you will see this week specifically is going to be Thursday and Friday, okay, as data is going to come out. So the latter portion of the week, some of that risk is really going to start to pick up. Nevertheless, we are sitting, okay, at 12 and 13 vols throughout the course of the week. So this is where everybody says volatility is dead. But may I also mention, okay, that VIX is still very much elevated versus where it was at some other recent highs. So markets are sitting very close to recent highs. Okay, VIX was a hell of a lot lower, okay, on a percentage basis than it is right now. So there's definitely an element of more risk being priced in. Why? Okay, here's my firm belief about volatility right now, and this is rather important. Okay, um, the reason that volatility is higher is, okay, number one, the marketplace definitely views Nvidia and a handful of other products, okay, as being, okay, basically systemically important. Okay, they're of enough market cap now that the marketplace is really pricing their risk into, all right, S&P 500 volatility, which is crazy to think. You have 500 stocks. There's no diversification. That, okay, is being priced in. However, I have, okay, kind of an alternative for you. This one's an opinion. This volatility to me seems extraordinarily low, okay, versus overall movement, right? Versus price action. Okay, seems low versus price action. So why am I saying that? I think what we're seeing right now is boatloads, okay, and I just saw somebody talking about zero DTE, okay? I think people are talking about zero DTE, and well, lo and behold, the amount of capital that you can receive selling these zero DTE right now, it absolutely sucks. It's horrific. Not only isn't there a skew, the skew is actually against you in here. It's just, there's no premium in here. And you go, wait, on one hand, you just said volatility is high. Yeah, the VIX definitely looks a little weird because it's actually pricing in single stock risk. But in the SPX, okay, overall volatility, especially in the short duration stuff, is inherently low. You're not getting paid for your risk in here. You're going to get killed. The reason being, and I talked to some traders this last week, but okay, all this crap in here, it's being sold. It's being sold by big firms. So volatility is being suppressed. Okay. And then they're turning around and buying options and stuff like Nvidia, inflating volatility here. Okay. Suppressing volatility here. So the trade that's going on right now, okay, in these dispersions is SPX, okay, versus, and I'll just say Nvidia. Okay. It's a lot more than just Nvidia. So SPX versus Nvidia. Okay. In here, implied vol is inherently low. In here is inherently high. Okay. But as long as the trade continues to work, nobody gives a damn. They're selling tons and tons of options in here, sold, okay, to actually finance the need to actually buy options and stuff like Nvidia. So they're driving this volatility, okay, lower right here and driving this volatility higher. And that's actually what the tactic is, in fact, doing. Unfortunately, okay, this is how I think people are going to get smoked, though. Okay, the zero DTE trade continues to kind of pick up a little bit. in terms of overall volume. There's nothing trading right now in SPX. Like if you look at SPX, let's just be literal about this. There's almost 500,000 contracts that are traded today. Okay. Now there's nothing really trading though, other than today. Okay. There's tens of thousands trading almost per strike. Look at the volume. Forget about the open interest. Let's get open interest even off there. Okay. Just look at the volume. Take a quick glance, it's 1, 3, okay, you're basically at 10,000, 20, okay, 35, we'll just round it 40 plus another 15. I mean, look at the contract size in here. It's not going to take you long to realize that everything that's trading, okay, is here. And when I say volatility is being suppressed, that's not like somebody's, artificially like lowering vol. If you sell a lot of crap, it's supply and demand. You're creating a tremendous amount of supply, so volatility comes down. Okay. Meanwhile, take a look at something like Nvidia. Nvidia, oh, that's unusual. After the earnings announcement, look, okay, if you don't think that this is accurate, you just got to look right there. Why is the volatility high? This thing has 4 days left. Okay. Volatility is actually picking up in here. So really dangerous trade. And I think that they're going to unwind it rather quickly. Just be very careful in S&Ps at this point, because the trade that unwinds, if it does unwind in Nvidia, is going to reverberate right back into most of the major tech stocks. So that's what's going to be so critical throughout the course, specifically of this week. The reason I was mentioning stuff like PCE data and so forth, these are just catalysts along the way. Okay. They're catalysts along the way, but that PCE data is a big one. And it's a big one simply because if you saw what that data is indicating, okay, it's indicating a fairly decent uptick, okay, uptick in inflationary pressures. So that's one that's going to be a wild child for the marketplace. 50-50 advanced decline line. Look, people, pay no attention to ticks because they've not had a great degree, in my opinion, of accuracy this morning. So you're looking at ticks. Ticks have actually descended a little bit. Look, there's just not a huge amount of volume. There's not a lot of oomph behind trade today. Okay, it is what it is. All right. So we're going to sit tight and we're going to let this marketplace kind of open up a little bit. When I say open up, remember when there was up days and down days. That's what we have to look for at some point. Okay. Okay. Ron was seeing like risk reward is really bad right now. It's horrific. Okay. In the SPX, like if you sell options in SPX in the short duration, okay, you're probably going to be selling yourself into a shallow grave. I mean, look, it's not about 16 vol or $17 expected move. Okay. It's just, there's no skew in here. It's horrific. So you say, well, why is there so much volume? Trading firms, again, they're not doing what you think they're doing. They don't give a damn. They'll sell 10,000 calls and 10,000 puts, and they'll go take the money and they'll actually buy stuff in Nvidia. If Nvidia moves big, they make money. The hell do they care? Okay. Their hedge is, the buy side of Nvidia. So if the market crashes, they've probably bought both calls and puts in Nvidia. And you know, that's the world you're living in right now. And that trade, as long as it continues to perpetuate itself, it's okay. Speaking of which, I was talking about this earlier. The number of calls being sold, remember, was way outpacing the number of calls being bought. Look now, dead heat. And then the stock rallied back. Okay. So those call buyers are not done. Maybe they're being a little evasive, okay, but they're not done. And Nvidia is basically owning this market once again. So some sell side in a number of key stocks. Okay, it doesn't seem to be, really doing much. Okay, to the overall Nasdaq at this point. Nasdaq not at highs, but pretty damn close to it. Pretty much that opening print was the high, faded off of it, but we do look like we're bidding back at this point. And nothing going on in any of my positions in here. Okay, onward and upward. I still have a position on in TLT. Okay, that position is now down to 18 days. running out of time, needing to move to the downside. Remember, I did not pay for this position. Okay, it was part of a catapult, but I'm sitting tight with it. Okay, as this week kind of progresses, I think the trades I'll be looking for, large part, I'm going to do some more catapults. Okay, and I'm going to do some more catapults because I'm ready again to start positioning myself inside of the S&Ps. I can take both bullish and bearish positions, but it's it's hard right now, other than in stocks like, we can look at stuff like Tesla. Okay. If I'm saying bullish positions, we can look at stuff like Tesla, okay, for bullish positions and see if the skew is favorable enough to be able to pull something off like that. Okay. By the way, I'm just going to switch this up a little bit. It's 25, 35. See, now that's not bad. Look at this. It's a $10 wide spread, okay, for a $2 debit. That crap ain't bad. Then I just have to figure out a way to finance it by selling some calls in here. Okay. Not bad at all. But that's the kind of trades that I'll be looking for throughout the course of this week. I want to start to open up some more shots in Catapult because I think we're poised for some decent sized movement. So why bullish inside of Tesla? Not about just ever being the contrarian. It's down 20% on a year-to-date basis. Okay. If a capital rotation is going to come, right, it's probably going to come into Tesla. And you might be actually seeing some of that right now. Speaking of which, I noticed, okay, Tesla last, 2 weeks, okay, upper edge of the expected move, upper edge of the expected move, got whacked, didn't do much last week. This week already hit the upper edge of its expected move. So that's out here though. You got to get all the way back up to like 230, 240 to make that thing fully profitable, plausible. Okay, it's very plausible. Anyway, with that, so the market right now is still massively unchanged. A few stocks I wanted to bring up too before I bring it over to Jeff Bierman. Okay, Berkshire Hathaway earnings. Okay. The earnings were, I think, interesting in here. Okay. They were interesting in respect to, by the way, the options, they don't trade much in here. And this is earnings. So it's like 8 times the norm, but 30,000 contracts. But the reason I am bringing it up, okay, is Berkshire. Okay. This might be a critical reversal inside of here. Pay attention to this because Berkshire owns the financials. The XLF, okay, the XLF is is a huge portion, okay, of it is actually Berkshire. In fact, I'm pulling it up right now. Let's see if I can actually pull it up in here. Leverage shares 2 times long. Oh, come on, man. It's not showing it. Okay. Let me see if I can actually find it. Got it. Got it. And let me pull up the XLF. Just hang with me here for 1 second as I bring this up. What I'm trying to actually show you guys, what I'm trying to show you is the in the holdings, the percentage of the holdings here, okay? 13%. Look at this. 13% of Berkshire Hathaway is the XLF. Then we go into JP Morgan. This is interesting as well. Visa is part of this, okay, which Visa's a monster in terms of market cap, but Berkshire means more in the XLF than any other product. And it does look like it's having a bit of a reversal in here. So be mindful of it as this day kind of progresses. There are no buyers in sight over here, and it is pulling the financials under. Let's see if that has an impact also back to the energy sector. Okay. The XHB trade right now, I'll update you guys on some of the in-out spreads tomorrow, but the XHB trade, there's nothing we can do. We're going to sit with it. Okay. Caterpillar at this point, here's another one where we're right at the money, 25 days left. Sit tight in there. Okay. We need some movement out of the overall market. And that's okay, to say the least. And the only movement you're getting right now is price action that's sloptastic, okay, followed by a couple of catalysts. And that's really tough, right? Especially when there's a big skew to trade in. All right, other stocks that are kind of in the news to mention Nvidia fever. Okay, taking a quick glance over here, it's Micron. Okay, Micron had a mention from Nvidia. Stocks up 5%. Okay, nothing big, people, nothing crazy. But if you want to look right now, look at the expected move and how significant a breach last week was and how significant the breach is today. So this is, again, you have stocks that are just exploding higher on what literally mentions from Nvidia. Okay, if ever there's a sign of like things getting crazy, things getting bubbly right now, that's it. You don't have to look too far. We were bringing up SMCI again because it had, I believe it was a 98 RSI, and I keep saying like the RSIs and so forth. Okay, this one, it's not dead yet. Okay, it is not dead. It's kind of mellowed out a little bit from its move. Okay, but for those of you that are into RSIs and so forth, look how far back the RSI has actually fallen. That's why I don't think it's trustworthy. Okay, at this point. Okay, it's only when the stock is in an incredible move to the upside. Speaking of incredible move to the upside, the S&Ps this morning again literally unchanged with a side order of nothing really going on. Google's the big mover inside of tech. It is actually, if anything, it's holding the NASDAQ back, okay, quite considerably. That doesn't look like holding the NASDAQ back, but it is. Uh, Meta also seeing just a tiny bit of sell side. Nothing to really read into. Apple right there with it, okay, not doing anything. And the volume of the overall S&Ps is, again, it's incredibly, incredibly light. Just to kind of quantify something for a moment, we are barely substantiating maybe but 2,000 contracts. Just put my mouse right on the 2,000. We're substantiating barely 2,000 contracts a minute, which is a marketplace that's just floating, looking for something to latch onto. Again, that Berkshire trade is definitely having an impact back to the financials. Okay, we'll see if that kind of continues throughout the course of the day because that's going to actually put some pain back to the S&Ps. There's nothing else to go on. Trades we have on right now, sit tight. Okay, a little movement in VVIX, a little movement in a lot of the volatility contracts. So vol seems to kind of be picking up a bit in the marketplace. And again, with a heavy skew, it's making it really rough to want to buy, call spreads of any kind. So let's see if this thing actually opens up a little bit. Okay, there's some more and more data coming out. As I said, as the week kind of progresses, cruise back to the calendar for 1 second. As the week progresses, start off rather slow. By the way, don't worry about stuff like housing starts. Okay, no one cares. Durable goods, though, tomorrow morning, it's a market mover. No one cares about Case-Shiller. Seriously, no one cares anymore. Those are not even big enough to move markets. Durable goods, PCE data. Okay, but we're getting a lot of data throughout the course of the week. There's GDPs coming in from around the world as well. Retail inventories, wholesale inventories. There is some real market moving events that are going to happen. Each one of these catalysts that we pass through, though, things are going to get crazy. As this week progresses, expect that the S&Ps are probably going to make moves before some of the data starts to come out. Nevertheless, okay, still on NVIDIA Watch 2024. Jeff Bierman's going to be coming on here in just a few seconds. Okay, and he's got bull versus bear historical trading days tendencies. Okay, has there been a statistical shift? Part 2. Okay, historical trading days tendencies. I can't get that one out, Jeff. Okay, I got what you're saying, man, but I just can't get it out. So, oh man, it was nice having 4 days not having to read Jeff Bierman's titles in there. Okay, his puns, the puns over there. Everything has to have a pun. It's not funny. It's just a pun. With that, okay, I'll give you my take today. Just a very mild, okay, continuation of markets kind of coming in. The very last thing that I want to mention this morning before I turn it over to the professor in the Analyze tab under Think Back. Okay, should have mentioned this a little bit earlier, but I wanted to leave you with leave you hanging over here. But here's February 26th. Okay, come on, open up. There it is. There's a $25 expected move today. Okay, I think we're finally due for a little bit, just a little bit of markets opening up to some progression to the downside, led in large part by some of the tech stocks that are lower. I do believe we're going to see continued sell side activity, though, specific to the financials. So actually pulling the Nasdaq down, pulling the S&Ps down with it. Stay tuned. Professor Bierman is coming on right now.